Hello, how you guys doing? My name is Orlua Adamola Tobin, here with my FIN377 stock pitch on why you should invest in Walmart. This presentation is on behalf of Professor Kelly Cam, so we're going to get right into it. Alright, so before I get started in the presentation, I just want to give a brief timeline of what to expect. So we're going to do an opening, do a company overview of what Walmart is as a company and who their main competitors are. Then we're going to get into their qualitative and industry news, so like their growth opportunities, their strategic opportunities, the company brand, the company size, as well as consumer outlook. All these factors that I'm going to talk about are reasons why I believe as investors we should overweight and buy stock in Walmart. Then we're going to get into some financial evaluations that show that the stock price of Walmart is expected to go up, and therefore as investors we definitely need to buy in so we can secure the growth. And then lastly, we're going to give my closing remarks, news and expectations regarding Walmart, and just a summary of everything that we talked about throughout the entire presentation. So a brief overview. I know most of us know what Walmart is as a company, but they're a multinational retail corporation that operates a chain of hypermarkets, discount department stores, grocery stores, etc. Basically, anything you need to buy, you can most likely find it at a Walmart. It was founded in 1962. Looking at your stock price, you look at your 5-year gain, it's gained over 30% over the last 5 years, and over the past year, it's had a 20% return. Within the industry, it's a forecasted growth rate of about 4%, which is definitely good. The retail industry is always going to be booming, considering buying in the retail industry, it really just all depends on how much discretionary income consumers have, and like Walmart being a very discount-heavy store, is obviously going to have a lot of revenue and a lot of sales. So a 4% industry growth rate is quite respectable. Looking at its 5 main competitors, we have some big-sized companies, we also have some small-sized companies. So obviously we all know about Amazon, Target, Costco, Kroger, and CVS are listed as its top 5 competitors according to this fact set. Kroger and CVS are on the smaller side, so in terms of competition, we're not really too worried about Kroger and CVS. The main competitor for Walmart projected moving forward is definitely going to be Amazon, and that just has to deal with how the retail industry is moving into online sales, and we're going to talk more about that throughout the presentation. So looking to the upside, I'm going to talk about 4 reasons why you as an investor should have faith and confidence that the Walmart stock is going to outperform what it currently is right now, and should definitely buy in. The first thing we're going to talk about is the toy industry. Now, if you pay attention to financial news, Toys R Us recently just went bankrupt, kind of closed down the shop, and the reason for it going bankrupt is not a reflection of the toy industry. The toy industry is actually growing very well, and with the collapse of Toys R Us, Walmart finds itself in a very advantageous position to capitalize on Toys R Us going bankrupt. Since the bankruptcy of Toys R Us, Walmart has seen a 40% increase in toys online, as well as a 30% increase in toys in store. If Walmart continues this trajectory it's on, it can cement itself in the toy industry and become a major player in the long run. The next thing I want to talk about is groceries. Like I said, Walmart is the largest grocery seller in America, and with the advantages of technology that we have now with Postmates, grocery delivery, Instacart, and all these new technologies that are happening, Walmart is leading the way in branching into online ordering, where you can order online and then come to the store and pick up your groceries, or even have them delivered to you. If it can cement its foothold in this sector of groceries and e-commerce delivery, and this just serves as potential upside for the growth of the company. Speaking of e-commerce, Walmart is expected to pass Apple as the 3rd largest online seller, behind Amazon and eBay, of course. And considering Walmart's economies of scale, an article online said that the average American stays within 30 minutes of a Walmart. If it can take advantage of this huge economies of scale, it can definitely leverage from its suppliers cheaper prices for the goods they sell online. This is just going to lead to higher margins on the already growing digital networking. Their online sales have grown about 43% since the beginning of 2018, and they can continue on that path. It just leads to more upside. And then the last thing to focus on is Walmart is scaling back. The CEO recently talked about shutting down unprofitable branches and projects, and most of the projects that are shutting down are international. They have operations in Brazil that they're shutting down, operations in the UK that are emerging in order to cut down on costs. Um, and they also have in India, they recently just acquired a company named Flipkart, and they're looking to kind of scale that back as well. Um, and that's kind of reflective of what we learned when we kind of discussed Yahoo. Yahoo had its core, and then as well as its international and other ventures. Its core wasn't performing well, but that was being masked by how successful its other international ventures were doing, such as Alibaba and Yahoo Japan. Here in this case, we seem to have the exact opposite, where core Walmart is actually on track and doing very well, but international ventures and projects seem to be slowing it down. So the fact that they're scaling back is also definitely a good thing. I talked earlier about how retail industry is very dependent on the status of the economy, as it's all about consumer discretionary spending. Well, with a recession inside, according to most analysts, people are going to start scaling back how they're spending, which means they're going to be spending. They're going to be wanting to spend less, and that just favors a store like Walmart, where the average item is low priced. Low price guarantees kind of Walmart's biggest motto. So with the economy going into a recession, this could also benefit Walmart, as more customers are going to come back to them in order to buy from them. So now we're going to get into the financial aspects of Walmart. So we're going to evaluate Walmart using 3 approaches: a discounted cash flow method, EV to EBIT multiple, and the EV to EBITDA multiple. So I'm just going to go over my assumptions when I did my discounted cash flow model. Using projections from FactSet, we have a tax rate going forward estimated to about 2023 of about 27%, a capex over sales of about 2%. We use our weighted average cost of capital estimate from Bloomberg at 7.54%, terminal growth rate of 4%, and then other factors such as their debt, cash and marketable securities, as well as current shares and outstanding. So when we do the enterprise value by taking the NPV of our cash flows forecasted up until the end of 2023, we have a market value of equity of $313,160,000, and this number is obviously stated in millions as well. And then divided by the number of shares outstanding, we have a stock price estimate of $108.81. Compared to the current price of $100.29, we see a potential upside of about 8.5%. I just want to highlight, talking about the weighted average cost of capital, 7.54% is a little bit higher than what other analysts have stated, but I decided to go with what Bloomberg stated, just based on its reputation, as well as the fact that Walmart is investing heavy in order to compete with Amazon, such as investing in one-day delivery. They've invested over $1 billion more this year in different areas of the company, and for that reason, I feel like a higher weighted average cost of capital is justified. Then we're going to go into like the comparable company analysis. So like I said, Amazon, Target, Kroger, Costco, and CVS are its top 5 main competitors. We decided to go with the average multiples simply because we feel Walmart falls in between, with Amazon and Costco posting better sales while Target, Kroger, and CVS lagging behind. Walmart kind of fits directly in the middle. So going with the average multiple for EV EBITDA and EV EBIT seemed most appropriate. So when we use the multiples approach, using the EV to EBIT approach, we get an estimated stock price of $172.39, and compare that to the current stock price, that's almost a 72% upside, 71.89 to be exact. And then we use the EBITDA approach, we get $149.31 estimated stock price, and then compared to the current price, that's almost a 50% upside, 48.88 to be precise. And then we kind of get the average of all these valuation approaches. We get a stock price estimate of $143.50, which is a 43% upside, which is why I issue a strong buy recommendation for Walmart stock. And to just kind of close up my argument, this Thursday, Walmart is expected to release its earnings report for the second quarter. It has a forecasted EPS of $1.02, and although this is lower than its EPS from this quarter last year, you want to take into account the heavy investing Walmart is doing. All the investment that Walmart is doing just kind of points how right now, even though it's not necessarily growing, it's not underperforming either. And the steps that it's taking, both strategic and financial, to make sure it's ahead of the industry when it comes to e-commerce, digital sales, toy sales, and just making sure that it's playing a part in multiple different avenues of retail, it just points towards long-term growth. In the PowerPoint slide was also included some key metrics, such as its earnings per share For the year, being at 4.92, which is very high. Even though it's investing so much, like I said, it invested $1 billion more this year. It's still paying out a 2.12% dividend. And then just to reiterate, the past year he had about a 21% return. And so, in just some final recent news from the CEO, he wants to push Walmart in the direction of grocery sales and delivery, like I said, digital sales, as well as the use of robots and virtual devices to help lower expenses when it comes to staff. And then when you have robots doing this menial jobs, your actual staff can improve customer satisfaction by having more one-on-one interactions with them in store. So this is the end of the video. So I just want to reiterate my point that I believe Walmart is a strong buy recommendation. I hope the data that I've provided you, as well as the qualitative and industry research, is enough to at least get you interested in looking more in depth about Walmart as a stock and its potential going forward. And I hope you agree with me in regards to my buy recommendation. I've attached a list of my sources where I got most of my information. Then if you're seeing this video, you've also seen the link to the video recording, which is going to be uploaded onto YouTube. Thank you for watching and have a good day. Bye.